Let's take the conversation further now with Johan Els, who's the Chief Economist at Old Mutual Investment Group. Johan, many thanks for your time this afternoon. So what is the Old Mutual Investment Group's expectation when it comes to the decision that the Reserve Bank will be making this afternoon?
Hi, good afternoon. Yes, we expect them to keep rates unchanged, as you suggested. I think with inflation well under control and the economy still busy the recovering process, it's too soon to start raising interest rates. But what will be very interesting this afternoon is to watch this language used in the statement as well as the voting pattern from the MPC to judge where are we heading and when are we going to see that first interest rate hike.
Yeah, and that was going to be my next question. I know we are trying to recover the economy after the depths of the pandemic, but I mean, how long are we expecting to see rates remain at 3.5%? Surely we're going to see something coming in the next couple of quarters.
Yes, you're right. We can't keep rates this low for an extended period of time. For now, even though we expect a very strong economic recovery this year, I've got 5.6% economic growth forecast, and I think the Reserve Bank will raise their forecast as well. They warn, and we've seen in the last GDP numbers, that it's still a very uneven recovery. So there's lots of uncertainties around that. Plus, inflation very low and well contained, and inflation expectations also very low. So I think there's not enough reason to start hiking rates this year. And therefore, I think by early next year, there will be enough evidence in terms of economic growth. And with economic growth also comes slightly higher inflation risk that the Reserve Bank will probably start hiking interest rates early next year. But I think the important point then is that it's going to be a slow upward path. It's not going to be significant rate increases over a short period of time. It's going to be slow and steady so that the bank can see that growth continues upwards. But we also want to watch the inflation picture to make sure that inflation doesn't run away. So as the bank themselves said, it's a data-dependent decision. But for now, I think not seeing rates upwards before early next year.
And I'm glad you bring up inflation, because I did want to focus on the inflation outlook, as it's one of the elements that is considered when the SARB makes their decisions. I mean, your opinion on the trajectory that inflation is taking. We did see it coming at around 4.9% yesterday. I mean, just your thoughts on that direction.
Yes, there's two-way risks around inflation. We've seen significant commodity price increases, which normally leads to some other price rises. We've seen globally some inflation pressures coming through. I still believe that the bulk of the global inflation pressures, especially those in the US, are temporary increases linked to the lockdowns last year and the reopenings of the economy this year. In South Africa specifically, we've seen very little pass-through from a weaker currency into consumer prices over the last several years. And that's as a result of the very weak economy, of course. It was very difficult for businesses to pass on those cost increases. That might change at some point in the future. If we see a continued growth recovery on a more sustained basis, businesses might be able to pass on some of those cost increases. But I think that's more in the longer term. In the medium term, the next 18 months or so, I still expect inflation to be broadly around the midpoint of that target range, around 4.5%. So that's an area where the Reserve Bank has previously wanted inflation expectations to be stuck around, and where they're fairly happy that we're not around the upper end of the target range anymore. So inflation fairly subdued. There's downside risks in terms of some of the services price pressures, rentals, for instance, which got a fairly big weighting in the CPI index. And there seems to be some upward price pressures recently in terms of food prices. That's more global food prices, because locally we've had record crops, and that should help keep food inflation in check.
Johan Els, as always, thanks for your time. He's the Chief Economist at Old Mutual Investment Group, talking us through the expectations of what's likely to come out of the South African Reserve Bank this afternoon in terms of the Monetary Policy Committee's interest rate